Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla. Let's talk about what is happening today. Bit of a, painful day to say the least, but hopefully it's not too much of a surprise. But regardless, let's go over it. If you enjoyed the video, don't forget to hit that like button. It does help a lot. This is not financial advice and I am not a financial advisor. And of course, my membership section on YouTube is live. Posted quite a bit of updates today. There's a lot to talk about today. Like pretty much all of these posts you see right here that I'm scrolling through are all posts from today. Every single one up until this one right here. So all of these posts were just today. There's a lot to talk about. So I'm going to try covering the majority of what I discussed there as well in this video. So let's just jump into it. Tesla closing the day down, unfortunately. Let me just double check the exact pricing because again, this changes after hours, but closing down about 5.5%, which is putting us at almost $210 per share. So let's discuss it, right? What does it all mean? So as we've talked about many times, right? We were in this little situation that we found ourselves where, we were pretty much sandwiched in between the 21 EMA, the 200-day moving average on the daily. And of course, it's going to pick a direction sooner than later, right? We talked about how, it's just a matter of confirmation. And today we opened up below it, came up to retest it. And in this case, we couldn't pull off what we did the past 3 days. And the first thing I told my members this morning is the fact that one thing to understand and why this might finally be that move to the downside and it might have finally picked a direction and not be another bear trap like these 3 candles in a row were is pretty simply the fact that we did break. The second we broke below this low right here, the low of yesterday, yesterday's trading range, if you will, right, which is about 217.5 roughly. The second we broke below that, to me, is like I'm pretty confident that that is now the direction. Like the direction has been picked to the downside, right? Why? Well, quite simply, if you notice one kind of, pattern, if you will, of the past 3 wicks of these candles right here, these past 3 days, right, where we just had 3 massive bear traps in a row with some bull traps, of course, too, but especially bear traps, right? 3 in a row. Every single day has the low, it has set a higher low than the previous day, right? So this candle was higher than this candle, the low, right? The lowest point of the day, the wick. And then this yesterday was also it set a higher low than the day before that, right? So it kept making like higher lows, higher lows, higher lows until we finally broke below yesterday's low, which is of course, like I said, about 217.5. We officially broke this trend, broke this pattern. We set officially a lower low, which should be enough to confirm the fact that it's time to head down. And head down, we absolutely did. Even if you were just to play off of a confirmation like that. Let's just say you entered puts off of that confirmation alone, roughly, and let's say you give it a bit of leeway. So it's maybe not exactly 217.5. Let's say you entered at 217, pretty much on the dot. And let's say you're somewhere that you took profit somewhere like, at like 209, let's say roughly, not even at the very bottom. Let's say you took it somewhere around 209, 210. That is in itself a 3% move to the downside, right? Just playing that alone is a 3% move. That's not darn bad, right? So that's why it's always really good to wait for these kind of confirmations, right? I don't really play puts. I don't short. I rarely short. I only short to hedge, but when I have a lot of cash, that to me is my hedge. So I just end up buying. So I personally don't do those kind of plays, but if you were to, that is obviously a really good way to do it. So that's kind of what I see there. And I also talked about how, I potentially saw this situation as being a rounding top or a cup and handle. Obviously the handle or the cup and handle pattern has broken because we essentially just went straight down. But in the post 5 hours ago, I said how this could either be a cup and handle or a rounding top. If it's a rounding top, that means the bleeding continues sooner than later. If it's a cup and handle, we obviously make the handle, we run up to 218 and then we make our way even lower. Obviously we ended up going down, but regardless of the path, obviously, I expect it to go overall lower than what this area was over here. About 212 is when I set that. So that's another thing to understand. But let's see. So another thing to know that's important though, that's a little bit bullish, I guess, somewhat, is the fact that we are not closing below the 200-day moving average. We did on the weekly chart. We are at the 200-day moving average once again. We're not closing below it. We're in fact actually arguably bouncing above it, which is so far so good. So as long as we close above this tomorrow's Friday, of course, for which I think we will, fingers crossed, of course, but I think we will. That's a good start, right? That is a good start, and that's what the bulls want to see ideally, right? Now, closer to the end of the video, I'll go over what I personally think is like my ideal scenario moving forward for the rest of the week, not the rest of the week, so the rest, a week in advance. So essentially, I guess the rest of this weekend, next week, the majority of it as well. And kind of like what I personally foresee happening for the rest of the month. Kind of like my ideal scenario is what I'll discuss towards the end of the video. I just want to make sure I'm not really missing anything right now. And then we talked about the fibs. So the fibs are important, right? The fibs are something that you want to pay attention to. Now, This is how you determine, potential bounce areas, right? So the way I look at it is quite simply, you take the low, the swing low to the swing high on the 65/1 hour chart. What does it tell us? Well, if we do that exactly right now, go from this rough swing low to this rough swing high right here, you can see we, kind of went down in step ladders, right? The main one, of course, being, so 0.382, which is about 214. We kind of stopped there for a little bit. You can see had a little bit of, potential buying pressure. And then we, of course, continued making our way down. And then, of course, we came down to about the 205, the 0.5 level, which is 210, share price, right? And then of course we ended up closing just right above it, and we started acting as a resistance. Unfortunately, we came back into it several times, constantly got rejected, and now we had a massive rally towards the end of the day, but still kind of finding a bit of rejection around that 210 area. We also talked about 210 many times, 210 to 212 being an area of support and or resistance, right? In this case, of course, now it's going to be acting as a bit of a resistance. I don't think it's a major resistance, but a resistance nonetheless. Now, the next level before that is where we actually so far bounced, was that 0.618 level, which is 206. Now, this is an important level because number one, this 206 level is, like I said, the Fibonacci level we just talked about, but it's also the gap fill, and it's also a support level. As you can see, we had a lot of wicks over here and a lot of candles that found support, to the point where I should probably draw this in as a actual support area, because we had a lot of support around this area. Might sneeze soon, so just bear that in mind. Excuse me. But nonetheless, it's an area for bounce because, again, support level, Fibonacci level, gap fill level. You can see right here that we essentially gap filled. You can technically argue the fact that we could have went a little bit lower to truly gap fill, but that's only like, the gap itself technically started at 205.73 and we went to, it's about $1 off. So I guess you can make an argument that maybe it's not truly filled, but in my opinion, it's close enough. And you're playing with the dollar at that point. It's not worth risking potential upside to, being greedy for an extra $1 before you start buying, right? At least in my opinion, right? That's how I look at it. So that's important to understand. Then I talked about, my members, a bunch of things that I look for in a reversal, right? What do I want to see in a reversal? What do I want to see Tesla do to kind of more confidently say it bottomed? First and foremost, I like to look at to see a daily bullish reversal candle, such as a hammer candle, a doji candle, things like that. On the 65-minute chart is a start, but is ideally on the daily. That's number one. Number two, I also want to see a bullish divergence right now, short term on the 65 and long term or longer term on the daily. So for instance, this will go into my ideal scenario that I see, or at least I hope plays out, right? AKA my ideal scenario, which kind of takes into account a bullish divergence. But essentially what I want to see in the 65-minute chart, because usually it'll happen there first, is a bullish divergence, where essentially as the stock is going to be making lower lows, we're making higher lows on the RSI in this case, right? That's what I want to be seeing. Eventually, I think it'll happen. It'll just take time to kind of build that up and set that up, etc. MACD flipping bullish is a bonus, obviously. Ideally, this happens at a massive area of support / demand, such as, of course, this 206 level, but especially this 200 level. We'll talk more about that right after this, due to reasons such as, the 200 level being a support demand area just naturally from before. It's a psychological support. It's that Fibonacci level. You can see that at the very bottom, 0.786. The volume profile, which we've talked about before, does substantially increase. We talked about that yesterday, right? If we drop down here, that, there's potential for this, of course, to be a massive area of support once again, because again, you can see the volume profile area substantially increases, even more than it is all the way up here. So it's a massive area of, in this case, because we're coming down into it, support. That's another reason, right? And on top of all of those things, there's still a very real possibility that this ends up just being a double bottom, right? So for instance, we can argue from here, we started a massive fall, right? Ever since around, I think is this earnings? I think this was earnings, wasn't it? I believe, let me double check. I'm pretty sure this was earnings, right? Yeah, it was earnings, right? So essentially what you can make the argument is the fact that, we, ever since this retest of this overall top of the channel bull flag, right? We came down, massive fall, including earnings, boom, bounced up. And then we come back down again, somewhere around this level of, 200, 195, just somewhere around that general level. And we bounce off of there, and then we set up a beautiful double bottom. That is a very real possibility. So that's why this 200 level to me is incredibly important, like super duper important. If we break below that and like start really truly closing candles below that, several days in a row ideally, because you could have made the argument that this candle back here closed at 196 and it's like, oh, it's all over, time to go to 180. But in fact, that was not the case, because you want to hold. It's not closing below is a good start, but holding below is arguably even more important. And in this case, we obviously didn't. We just recaptured the next day. So that's why you want to be careful with those scenarios. But nonetheless, I definitely expect if we come down to 200 to be a massive area of support. And of course, if we break below that and start closing candles and holding below 200, then I think that we'll come down to about this, low 180s to really truly retest the bottom of this channel, which I still think is a very real possibility. And I still will have cash ready for that just in case it happens. I'm not going to be greedy and all in here, but I am absolutely buying the dip that I did sell shares back when we were up in the 220s, right? So that's kind of what I'm doing with that as well. Obviously, you also have the moving averages included, which in this case, like the main one to look at is of course the 200-day moving average on the weekly, right? So those are the most important things I'd be looking at right now. Let me just double check to make sure we haven't really missed anything that's important. But these are everything I said right now is pretty much everything I've already told my members about pretty much throughout the day as it's happening and as I see it and, and whatnot. Now, let's talk about what is my ideal scenario. What do I foresee happening ideally, right? This is what I see happening. So ideally, we start bouncing. This is what I shared with them before we even started this little final green candle bounce, right? But the way I look at it is as follows. We bounce from pretty much this area right here, right? This Fibonacci level we talked about, this gap fill, etc. We bounce. We move up somewhere to around maybe, 215, potentially, as high as like 218. I don't know if we'll go up to 218. Honestly, I know I'd be a little bit high, but wouldn't surprise me if we go maybe to 212, 215, something like that. And, essentially retest one of these resistances that we just, or old supports now resistances that we broke down below, right? Get a mini dead cat bounce, if that makes sense, right? But the main reason I want to see that is because first and foremost, I want to see a closure above this 200-day moving average on the weekly. As long as we close tomorrow above this, it's fine. And in order to really have an ideal close above it, it'll be nice to have a bit of a green day, right? What that does is it holds above this. But with that being said, I also expect this to continue down. And the reason I want it to continue down is because then we'll start crossing below the 200-day moving average on the weekly. We'll get to maybe 200 roughly, give or take, let's say, right? Maybe 204, 200, something like that. We go below the 200, people start freaking out, people start getting worried, but then you still have the whole rest of the week to recapture it. That's the most important part. It gives us a lot of time to recapture it while still creating that panic at the beginning of the week. That is what I want to see, right? And then from there, because we did the move of where we kind of get a small rally like this, for instance, right from here, like we move up somewhere like over here, for instance, then we move down somewhere here, and then we bottom out, and then we start making our way back up. This also it gives the RSI an opportunity to start creating that bullish divergence where as we start, we start going up, this will probably start moving up substantially, and then we move down. And then ultimately what I expect is this RSI ideally wouldn't go lower than this current low right now. So for instance, the RSI would look something like this. Just again, a rough example. It'll go up something like this. Just again, rough example. And then as we go lower like this over here to 200, we go down something like this on the RSI. And just again, an idea like that, right? Where as the stock is making lower lows, the RSI is making higher lows, we start setting up that bullish divergence. And that's another, check mark to my potential bottoms and reversal signals, right? And that's something else I would like to see. And then I still think that we'll get a nice rally towards the end of November because it is, of course, one of Tesla's best month. Some FOMO created into the Cybertruck deliveries, et cetera, et cetera, et cetera. And potentially going up to about 240s, maybe even 250s. I still think that's not impossible because Tesla, the way it moves, can do pretty crazy things. And apparently Tesla, I saw it, I should have brought it up somewhere. I don't remember where it is, but on Twitter or X, it is extremely shorted right now. Like percentage wise, technically, I guess it's not a lot, but if you take into account the actual dollar amount of shorted shares, if you will, on Tesla stock, it's pretty substantial. So that could be a part of the reason as well, of course. Obviously, we need a catalyst for that. Maybe it's Cybertruck, who knows, but that is something to consider as well. But that's kind of the main thing I'm looking at. Now, another thing to understand is the QQQ. The QQQ is important because if you look in the daily, I talked about this, it's looking exceptionally strong, and it still is, right? We broke out of this overall weekly, daily, or weekly, I guess you can take into account, right? Potentially weekly. But the point is, what I look at it right now is on the daily. We broke out on the daily, and now we're arguably retesting this breakout pretty much on the dot. You can see I didn't touch it at all. This is pretty much perfection. We are retesting this overall bull flag breakout on the daily chart, on the QQQ, and Tesla's kind of following it right now, though a little bit on the weaker side, of course, right? But nonetheless, if this bounces and if this continues and this starts looking bullish, that should help Tesla as well. So we'll see how tomorrow plays out. Tomorrow will be important, but the QQQ, in my opinion, still looks really strong. And it's hard to look at this and be like, I'm going to short this, at least as of right now. So that could help Tesla as well. But those are the main things I'm looking at. And those are the main things I'm eyeballing right now moving forward. So that's kind of what I see. So if you guys enjoy the video, don't forget to hit that like button as it does help a lot. Again, my membership section is live. So, the link is below in the description, $3 a month if you're interested. Everything I talked about in this video, I've already told my members about pretty much throughout the whole trading day, as I'm constantly posting and updating things as I think of it, as I see it, as I, all those things, right? And yeah, so if that's something you're interested in, it's only $3. I tried making it very reasonable. And yeah, the link is below. So if you're interested, check it out. Otherwise, thank you so much for watching, and I'll see you tomorrow. Peace.